Good morning, everyone. Mike and Corey here today. Going to talk about some exciting topics, Walmart earnings, another ego stock, and then some exciting news from Microsoft and hitting a little bit more into quantum computing from yesterday's discussion on Rigetti. And then Corey's going to ask a question about buying the dip. Now, we talk about buying the dips on overall stock markets. We're going to talk about buying the dip on a certain stock. So as we get started,
that's a question that we got. Should we?
oh,
Someone
should
asked.
we?
We're going to try to answer their question.
So we're going to answer that question. So with that, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me start off with the big Walmart news. And Walmart shares drop. That's the headline. As they say, profit growth will slow. Now, this is where we've seen when companies come out with earnings, a lot of times it's what they're forecasting is almost more important than what they've done, which, the old high school, mom and dad, I'm going to do really good on my grades next quarter, but my grades this quarter weren't so good. This is the kind of the opposite. Walmart's earnings and revenue were great. They exceeded expectations. I'll scroll down here and you can see they exceeded the earnings per share and the revenue. But what they forecast is it's going to be a lot tougher in 2025. And that's why the company is selling off such a harsh word. The company is trading down 6% today after having a phenomenal run up. And if I pull up the chart, you can see the run up that they've had over the past year. So guess what? If you'd have bought this stock at $60 a share and it went up to 105 and now it's off $6, I would take this every single time. Great American company, but here's where I'm more interested in it. This is another example of finger on the pulse of the American consumer. If Walmart says things are slowing down and they're using all their analytics, they probably are. They could also be lowering our expectations, so when their next set of earnings come out, they beat it and they're all like, yeah, you're so great. So anyways, this is just something to be aware of when we come into this year, as interest rates are high, inflation is under control, but not exactly where the Fed wants it. This is an indication that this year may not be like it was the last 2 years, where we're getting 25% returns on overall stock market. With that, I'm going to talk about our next ego stock, which has been so far painful in a sense, because we put this in our ego stocks 2 weeks ago, and unfortunately they had some bad news, so their shares have sold off some. But this is SoundHound, and SoundHound is once again related to AI. So this is a tangential play on AI, but what they do is what it sounds like sound. They work on voice. And replicating with different systems, whether that's restaurants, banking, whatever, but processing speech, hearing it and saying it. So you're not really talking to a real person, you're talking to some AI out there that is licensed SoundHound's technology. So they are, known to be the leader as far as speed, accuracy, conversation. Let's see, I think products, I can show some different products that they have as far as, automatic speech recognition. And, whether we like it or not in this world, we always want to talk. I want to talk to the really smart individual that can solve all my problems, but instead I get call centers and I get voice recognition software, and we don't like that as well. But with AI, hopefully the computer side of it gets better, and SoundHound would be the company to tie into that. Now, what has this company done? And I'm going to show you the chart. Let's not beat around the bush here. I'm going to show you the 1-year chart. You see it surged up, hit highs in the about 25. We added it to our ego stocks 3 weeks ago, and it was 15, and now it's at 10. Oh, that's painful for me. which I have this in my portfolio, as well as any clients that have this aggressive holding in here. You're like, what happened? Because this isn't even earnings related. So what caused this initial surge up, or a lot of it, is that NVIDIA bought shares in SoundHound. So the big NVIDIA, Jensen Huang, you didn't hear my request to buy more shares in SoundHound, but NVIDIA owned a little piece of SoundHound. I'm not sure how much, not a significant piece, but what the reason they dropped is when NVIDIA came out with their information, and I can't remember what the form's called, that says, hey, what do we own? They no longer own the shares of SoundHound. So they sold them. They sold them somewhere in this time frame. And when NVIDIA sold theirs, the market, and everyone saw that, the market went, whoa, I don't want SoundHound either. And the market sold off about 30% that day. So that's what caused it. So when we talk about, what's an ego stock? Does it have a chance to double or triple? The underlying business of SoundHound did not change, but one of their investors did. And that is a significant investor. So we will certainly continue to monitor this. I did not, sell out of it, decide to get out. I did not lock in a 30% loss, but I also didn't buy any more. And Corey, we're going to talk a little bit about buying the dip in a little bit. If you did not own SoundHound before and you're like, this sounds like a great company, guess what? If you bought it now compared to 3 weeks ago when I did, you get it 30% off. I like that. That certainly would be a reason to own that. However, the long-term thesis is there's going to be a lot of players in this. I mean, this is an important technology. Competitors. Does NVIDIA, did they get out of them because they're just going to develop their own thing? That would put SoundHound in a lot of trouble. Or, at some point, could SoundHound be bought by someone else? It's a $4 billion company. If you look down here, $3.95 billion company. So it's definitely a small cap, not a big company. So anyways, that's SoundHound. And I did pull up the article here on why they plunged. They use the exciting words like plunged. So anyways, expected to still be a leader, did not change it. They collect royalties off the volume and use of it. So if you think of a musician that creates a song and they play that song at a stadium and the musician gets a royalty, that's how SoundHound makes their money. So anyways, that's one of our ego stocks. And like I said, with ego stocks, there's good and bad. I would have much rather seen, the stock go up 30% because NVIDIA bought more of them than go down 30%. But certainly expect this to be the kind of ride. And this is also why we have a basket of ego stocks where we have 10 of them. So with that, I will turn it over to Corey. And Corey, I just got to ask a question.
Yes, sir.
How do you feel when you see one of your stocks go down 30% in one day?
That's a great, Mike. That's a great question. So this is exactly what goes through my mind. So, and I have a diversified portfolio. Our client models are diversified portfolios. If I've got something like an ego stock with a very small allocation, right, and it has taken a 30% dip, I immediately know, well, now that allocation that I had to that particular ego stock has been reduced. The stock reduced its own allocation in my portfolio. So now, do I care if I'm down 30% on one of those things? I don't care at all. All I care about is, okay, now my exposure there is less. I'm letting the market tell me which of these ego stocks is adding value to my portfolio. And as a company loses some value in the market, it hurts, you're less and less exposed. On these ego stocks, we likely would not be buying the dip on most of these, right? It's a 1-year play. It's a small, unless something changes, right? If SoundHound has a new development of whatever kind, that could change that. But Mike, is that kind of how you think of it?
Yeah. I mean, it's kind of like typically within our highest portfolio of risk, there's like a 2% allocation to a sound hound. And so when that drops by 30%, 2% goes down to 1.4. And you
Right.
say, well, I hate to lose zero point 0.6 of my portfolio, 0.6% in a day. But honestly, there's days the whole market goes off by 1%. And, you know, so, I personally, of course, I want to do well for our investors. I hate to see it. Obviously, I had no idea that NVIDIA would be selling that. Never have expected that. So it always makes me take a step back, think about the thesis, why we're involved in that, and then, be thankful. This is one other reason why we would never, ever put a high percentage into an ego stock. Even if I was just totally confident in it, I still wouldn't, because there's things you do not know. So that's it. And of course, now when it goes up by 30%, I'm like running around like, yeah, that's the greatest thing. I'm glad I picked that one. And yeah, no, I don't know.
Yes. All right. Speaking of things going up and down quickly, Palantir has been doing a little bit of that. So I got a message from someone last night. And the question was simple. Should I buy the dip in Palantir stock? Well, my first thought, but the first thing that popped into my mind was, what dip? I mean, you look at this. This is just a 6-month chart. No, here we'll do a year. Uh, there's not a lot of dip here, just in general, compared to the stock's prior moves. But let's take the question and answer that question. Should we buy the dip? We know Palantir is valued richly. They have grown, their stock price has grown faster than their fundamental progress. So that's well understood. But what does that really look like? What metric would I look at? And again, this is a financial education show. So this is just my opinion. This is not the opinion of Ankerstar Wealth or of Mike. This is just simply my opinion for the person who asked me. So I look at a price to sales ratio on a high growth company like Palantir. Palantir had gotten up to about, as of yesterday, they hit a new 52-week high yesterday. They had gotten to about 100 times price to sales. So what does that mean? Whatever. 100 times price to sales means if someone was selling me a business, and this business made revenue of $1 per year in revenue, but they wanted me to pay them $100 for this business. And I'm sitting there thinking, well, of course, if there's no revenue growth, it would take you 100 years just to earn the revenue back for your price, much less whatever they're actually earning on that revenue. So 100-year time horizon is kind of like, I don't know. I mean, I don't eat that healthy. So do I have a 100-year time horizon? I don't know. Now, of course, Palantir's revenue is growing quickly, and Palantir's somewhere in the 30% range. Frankly, they're going to need to get that above 40, above 50, above 60, probably in the 70% range for the stock to perform meaningfully from here. Okay, now I also wanted to look at, so what is their revenue? So it's worth $250 billion. And again, they, in 2023, they did $2.6 billion in revenue. So again, that's that 100 times their annual sales. Traditionally, my advice on something like this is simple. We don't really want to put new money to work in a company that's trading above 50 times sales. So history hasn't been kind to companies trading at that level. And even 50 times sales is it's rare air. So that's not an easy buy even at that level. But if you just love Palantir so much, I would say wait until it gets below 50 times sales. Their sales are increasing. So 50 times sales is going to change quarter by quarter as we get more information on their earnings. I did have this one pop into my head, Mike. So again, somebody asked me, should I buy
Oh,
this dip on Palantir? It's trading at what, 90 times sales right now. The one that popped into my head was Snowflake. Snowflake went public in 2020, 2021, and there were headlines everywhere. It's trading at 140 times sales. What a company, right? I did want to look, what did Snowflake do after hitting 100 times sales? So 100 times sales somewhere in 2020, you're still, well, I guess today, if you bought there, you'd be down 54%
yeah.
over, a 5-year period. Um, People buy stocks for all different reasons. Some people buy because they want good returns. Some people buy just because they really believe in the company and they just have to own a piece. There's all those things are fair. But above 100 times sales, you just need to have a very long time horizon. And Snowflake, I'm sure their fundamentals have improved. I haven't studied them in a few years, but the stock price, you wouldn't really see that in the stock price for a while. I did want to look at what's another big company price to sales ratio. You see a Google here. Google, a more mature company, but they're just kind of consistently over these past 10 years trading about 6 times sales. So, that's what a more mature company's price to sales chart would look like. Going back to that Palantir, you're seeing kind of this kind of
Surge.
an exponential growth, right, in a ratio like this. And that's just showing that the market is having trouble valuing them. Google, it's a more mature company, a little easier to value.
So,
All right,
let me throw in too that a lot of this is the technical side of analyzing a company, but what you have to do is look at also the kind of the fundamental business side, what's going on. Why did Palantir sell off? That'd be the question. It wasn't that, a bunch of people looked at the charts, 2 days ago and said, nope, it's time to sell off. It's too high. Now, there's always a catalyst in the news, and the catalyst is whether this is, well, it's probably a good thing, but it's, less government spending. The government's going to spend less money, well, hopefully less. They're planning to spend less in 2025. And Palantir makes a lot of money from the government because it's defense and AI and the government. So if the government has less money to spend, it's likely that Palantir gets less because the pie is smaller. And then you throw in that, their CEO, changed. I think he may have sold some stock himself, took some profits. It's done really well. So, I mean, you always got to look at that kind of that fundamental side. Like if you had just looked at SoundHound, if you just looked at the technicals on SoundHound, you would have no idea that NVIDIA sold out of it. It wouldn't make any sense. Like, why did this thing just drop? So there's always the mix of that, I would say. And so the real question is, should you buy the dip? So here's what I would say. One is if you already had holdings in Palantir and you're already like, I already have a place in my portfolio, my diversified portfolio. No, I wouldn't buy more of it. I'd keep what I've got and say, well, that's just the way things go. It'll probably come back, we hope. Otherwise we would take it out of our models. If you'd never had Palantir and you're like, I've been dying to buy that company, but it shot up over 120 and now it's trading at 95 or 99 or whatever it's at, there's my chance to get it 20% off. Take a small position in it. Maybe take a small position, and maybe not a full allocation, but a small position and see where it goes. And if it continues to go down further, maybe buy a little bit more. But you just got to be careful that you don't end up riding the knife all the way down. Not that I think that's going to happen with Palantir. So go ahead, on to Microsoft.
No, good stuff. So yeah, that's great. Um, and companies trading at those higher valuations, whether or not that catalyst of the less government spending is really actually going to hurt Palantir or not, that's not what the market's reacting to. It's just that the valuation is on thin ice, or it was.
Yeah.
Maybe not so much today anymore. All right, Microsoft, just real quick here. I know we're going a little long. Microsoft announced a new chip. Mike, I
How
had
do
to
you
do some
pronounce
work
that?
to get this
I
pronounced
was
right. Here we
I was
go.
gonna say, how do you pronounce it?
It's the Majorana 1. Majorana
Oh,
1.
why did they make it?
Um,
I thought I was
and
gonna say it was the Major Rana.
well,
Ah,
it is major news. It is major news, but it's the Majorana 1 chip. So, the world's first quantum chip powered by a new topological core architecture that it expects will realize quantum computers capable of solving meaningful industrial scale problems in years, not decades. This is a great article. This is from Microsoft. I just want to highlight a couple things here. So this new architecture offers Microsoft a clear path to fit 1,000,000 qubits on a single chip that can fit in the palm of one's hand. This is a needed threshold for quantum computers to deliver transformative real world solutions. So here's a few. I'll actually hit those real world solutions in just a second. Here's what stood out to me. All the world's current computers operating together can't do what a single 1,000,000 qubit quantum computer will be able to do. Let's go look at some of those real world solutions they list down here. So it's solving chemistry questions, questions about plastics and how they can be broken down, etc. Biological questions. So for healthcare and agriculture, what it really does is this. It will allow engineers, scientists, companies, and others to simply design things right the first time. And then one more that I thought was really important line. So quantum computing combined with AI tools would allow someone to describe what kind of new material or molecule they want to create in plain language and get an answer that works straight away. No guesswork or years of trial and error. Could we see this technology push margins up even faster in these amazing companies that we are privileged to invest in? It is possible. So it's exciting. Microsoft's a great company. It's just one of their many levers there that they're working on, and just exciting times.
yeah, I mean, I kind of always thought of Microsoft on the software side. I know they have the Xbox, but they've lived on the software side. So for them to get into this quantum computing game, and with the dollars they have behind them and the brains they have at that company, uh, incredible. Glad that Microsoft's one of our core investments, because it sounds like they're going beyond their normal expertise. And I could see a Microsoft buying some companies too. So you take an ego stock like we covered yesterday, Rigetti, that does quantum computing. There's some other ones out there. I could see Microsoft being like, some of this we're going to develop, some of it we're going to buy, but Microsoft be that big aggregator. It's kind of like I see the Microsofts, the Nvidias, the Googles, the Amazons, the Apples. They seem like they all had separate businesses, but you're starting to see some convergence. Like, hey, you're starting to get in my territory. I'm gonna, they're gonna be fighting against each other more, maybe than always partnering. So it'll it'll be good. I'm looking forward to it. It's gonna be a fun next 1 year, 5 year, 10 year adventure in computing. So with that, on this Thursday, we will say goodbye. We'll talk to you tomorrow. Have a good one. Bye.